I talk a lot about my mentors from the past, right? I had wonderful, wonderful mentors. And a lot of the things they have said stuck with me. So this is going to be the segment that I give you guys a heart-to-heart conversation. I just talked about the gambling part of Wall Street, how it become a casino, basically. Um, 20 years ago, 30 years ago, if you told me, Sergio, this is just, isn't this like gambling anyway? I would have slapped you because I went to school for it. I put my years into it. I'm like, no, there is analysis and there is fundamental analysis, technical analysis. There is, you need to look at the macro economy, micro, all this stuff. I would have said all that. Today, if you ask me that, I will shake your hand and I go, I agree. We're gambling. Now, even in gambling, you have to have rules. Okay. My number one rule that I have always done or listened last 30 years plus is the 3 Ps. Okay. What are the 3 Ps? The 3 Ps were relevant in a book written in 1923. Okay. I didn't take it from there. My mentor told me that. He may have taken it from there, but it stuck with me. The 3 Ps. First P, patience. You got to have patience. You can't be in and out. You can't change your mind every 30 seconds. You can't be a hummingbird going flower to flower. Pick yourself 10 stocks. Get used to the movements. Get used to their implied volatilities. If you're going to trade derivatives, get used to them. Because certain stocks behave certain ways. There's no ifs and buts about it. It's almost like a girlfriend, okay? You don't need to be in 10,000 stocks. All these people on YouTube and stuff, they go like, oh, AI, AI systems are picking me all these winners and I don't have to do anything. I'm like, BS. None of that is happening. However, so the 3 Ps are patience, position, and planning. You may have patience, but if you take oversized risks, you're going to blow accounts without a question. So positioning is also as important. All these 3 Ps are equally important. Patience is important because you need to pick your battles. Patience comes this way. This is the best analogy I thought about, before the show. I'm a lion, right? I'm waiting in the bushes. I see a rabbit. What do? I'm a 400-pound lion. Am I going to go after a 5-pound rabbit? Chase it? Maybe quicker than me? I'm hungry. I got to eat. Well, what am I going to do? Am I going to go chase a rabbit? Or am I going to go chase a squirrel? Am I going to go chase a hog? No. I'm going to sit hungry until a deer or a zebra or a gazelle walks by me. Then I'm going to put everything I have, whatever I have left in my tank, because I'm hungry. I want to eat. I'm going to go chase that thing to death. And now I'm going to eat for a month. And I'm going to feed my clan for a month. That's the best analogy I can come up with. So patient comes like that. You have to be patient, like a lion in the woods or in the bushes. You can't go chase every rabbit. And that's what zero DTE guys do. That's what the day traders do. Chase rabbit and squirrel after rabbit and squirrel. I'm going like, no. Or a hummingbird, flower after flower. This flower nectar, that flower's nectar. You're going to get nailed. You're going to get blow accounts. So I haven't read this book, but I came across this on Twitter. And this is from a book called Reminiscences of a Stock Operator, which is based on Jesse Livermore, who probably in the 20s, 30s, before the crash, was probably the best trader on Wall Street. And in those days, we know there is no decimalization. We know there is no electronics, right? So, the book is highlighted and underlined. So for you all who cannot see that, the left screen is clearly indicates what I have been practicing for, I don't know, 30 plus years after my mentor told me about the 3 Ps. Now, he didn't put it this way, but I found this and I want to share this with the audience and whoever's watching now and later. So there is no one size fits all. It takes time and experimentation with real money to find a plan that works for you, right? How many times have I said, I don't like paper trading. Paper trading is playing like a video game. You get killed. What do? You push reset, you start again. There is no downside. At some point, You don't have to do it with 5-digit, 8-digit accounts. You can do it with $500, $200. If you position size correctly, you have fractional shares these days in everything, right? You got to get in the race. You got to put the real money in there, because when you do put the real money in there, emotions get involved. Okay? You must understand that. But the excerpts from Livermore, here they are, the underlying parts of it, 4 parts. Let's see how relevant or how much they correlate with my 3 Ps. It was never my thinking that made the big money for me. It was always my sitting. Which P is that, people? Which P is that? Isn't that patience? Just like the lion in the bushes. I think I can think of 100 trades a minute, but then I don't take 99 of them. Why? Because I'm sitting on my hands. I'm waiting. I'm waiting for the best setup that I can have. I have had success with in the past 30 years. Do they come around every single minute like day traders? No. They come around maybe once a week, maybe once a month, but I don't mind. I want to catch me a juicy, big old gazelle as opposed to a zebra. As opposed to a squirrel, right? Men who can both be right and sit tight are uncommon. That goes also with the P, right? Men who can be right and sit tight are uncommon. Well, what does that say? That's the trend is your friend. Think about it. If you're right and sit tight and let the winners run, that's where a lot of people fail. What they do is they take small profits and they let the losers go. And that's why they blow accounts out. So this book was written in 1923. No joke. Okay? You can get it on Amazon, actually. It's called Reminiscences of a Stock Operator. Number 3 excerpt. The market does not beat them, they beat themselves. Hallelujah. Market doesn't give a rat's ass who you are, what you're trading with, how much money you have, what you know, what your education is. Market doesn't give a rat's ass. What you do, though, is you position sizing correctly. You revenge trade. You're addicted to gambling. You have to trade 10 times a day. Well, you're beating yourself. You're going to beat yourself. There is no ifs and buts about it. So patience, right? And this goes with position. You got to obviously position correctly, but if you're position sizing up because you had a few losers, you're going to blow account after account after account, because now you're revenge trading. You're angry trading. Turn the damn thing off. Walk away. Come back in a week. Cool off, right? And last but not least, disregarding the big swing. Again, follow a trend. Go with the trend. How many times, how many stocks have I talked about in the past 5 months of the existing of this channel that you guys have seen a trend, right? Find a trend, disregarding the big swing. That's the trend. And trying to jump in and out was fatal to me. Well, there you go. Because if you can buy a stock at 5, ride it to 25, you can day trade that from 5 to 25 a million times, and most likely you're going to end up losing money. So, 3 Ps, people. Patience, position, and planning. Patience is a virtue. You learn over time. That's why when people ask me, oh, you don't trade that much, I'm like, I don't have to. If I'm convinced of a good setup, I am going to trade it. I'm not going to miss it, but I'm going to wait, right? What did I miss over the last 2 weeks? All these quantum computing stocks going from 2 to 30, 40, 50. Great. If you did it, all power to you. I'm not a chaser. I'm happy with making 200%. And if you're not happy with that, it's okay. Which I will share my numbers actually the first week of January. Number 2, position. You have to position correctly. Your sizing, it has to be correct. Your risk management has to be correct. That goes hand in hand. Position sizing. If you have a $5,000 account, you can't put all of it in 0 DTE and hope it's going to go to $5 million in a month. Not going to happen. You're going to blow it. And number 3 is plan. Have a plan. What is your plan? Are you a swing trader? Are you a day trader? What are you? First, find who you are. Once you find who you are, then you can create some setups for you that work for you in the past, and then minimize them down to maybe 2 setups, max 3. And if you see it, if you're a technical trader, if you see it on a chart, get on with it. Get on with the program. But nothing to me says more than this, that whatever was relevant in 1923 is relevant almost going into 2025, 100 years later. Because these are my best advice. Again, not trading or financial advice, but advice from what I've learned over the last 35 years. And I know one thing very well. You cannot buy or read or learn experience. You got to get your car in the race, as small as it may be. You're going to go hit walls. You're going to go hit every other car in the race until you get to be a better racer. Because this is not a zero-sum game. This is not a video game. This requires patience, takes years to master it, and there is no mastering it. I haven't mastered it. I'm still learning. I'm open to learn. And position size and planning. Once you do all those 3, calm the heck down. You'll be all right.